2025 was the year of IPOs in India. The market saw 373 IPOs overall, including 103 main board issues, raising nearly 1.95 trillion rupees. Naturally, analysts expected that momentum to carry into 2026, but that hasn't happened. So far this year, only 5 main board IPOs have come to market. So what changed? Is this a temporary breather, or has the IPO frenzy peaked? Let's break it down in this episode of Market Special. Recent listings tell the story. iFinance was subscribed just 0.97 times, signaling weak demand. Fractal Analytics saw 2.66 times subscription but delivered a subdued listing. Shadowfax Technologies subscribed 2.72 times, listed at a discount. Even Amagi Media Labs, despite being subscribed nearly 30 times, had a muted debut. Only Bharat Coking Coal stood out, attracting an exceptional 147 times subscription. Now this marks a clear contrast with 2025, when more than 40 IPOs, including Corona Remedies and Meesho, crossed 50 times subscription levels. Now, investor appetite has clearly cooled. Analysts say this slowdown fits into a broader market cycle. When markets rally, companies rush to raise capital. Liquidity flows into the primary market, and over time, that liquidity gets absorbed and enthusiasm fades. That cycle now appears to be playing out. Nearly 90% of IPOs come from small and mid-cap companies, the very segment currently under pressure. Around half of small-cap stocks are trading nearly 40% below their all-time highs. Many mid and small-cap stocks have corrected 30 to 60% from their late 2024 peaks. When existing stocks are falling, investors naturally become cautious about new listings. Market conditions have also turned volatile and range-bound. The Nifty Mid-Cap 100 is about 3% below its peak. The Nifty Small Cap 100 is roughly 13% lower. In uncertain markets, investors tend to favor established names over fresh listings, and IPOs inherently carry higher risk. Post-listing performance has added to that caution. Several IPOs that delivered strong listing gains in 2025 are now trading below their issue prices. That has made investors more selective. Now, liquidity is another factor. The IPO surge in 2025 absorbed significant investor capital. At the same time, the market volatility and foreign investor outflows have tightened overall liquidity. With corrected valuations now available in the secondary market, companies can no longer command aggressive pricing. As a result, many issuers are revising valuations, resizing offerings, or postponing listings altogether. So does that mean the IPO story is over? Not necessarily. More than 190 companies remain in the pipeline, collectively targeting over 2.5 lakh crore rupees in fundraising. So what actually appears to be happening is a reset. After a phase of exuberance, markets are demanding stronger fundamentals and realistic valuations. That shift may slow issuance in the short term, but it could also create a healthier, more disciplined IPO ecosystem over time. That's all for this episode of Market Special. We'll be back next week with another deep dive into India's market story.